Most people think you need a fortune to start investing. That is a lie. Today I'm going to show you exactly how just $100 a month can turn into over $226,000. The most expensive mistake isn't picking the wrong stock. It's waiting. Waiting for a raise or the right time costs you more than the investment itself. Let's look at the best places to put your first $100. Option number 1, index funds. This is the ultimate set it and forget it move. By buying an S&P 500 index fund, you own a piece of the 500 biggest companies in America. You are essentially betting on the future of the entire economy. Historically, the stock market returns about 10% annually. If you stay consistent with your $100 every single month, here is what the math looks like. In 10 years, your habit grows to roughly $19,000. It's a slow start, but the foundation is officially built. At the 20-year mark, things get interesting. Your balance hits roughly $76,000. Notice how the growth is starting to speed up? That is your money finally working harder than you do. After 30 years, that simple $100 monthly commitment has transformed into over $226,000. You didn't work a second job. You just let time do the heavy lifting. If you prefer expert management, mutual funds are option 2. High-performing mutual funds can return up to 12%. At that rate, your $100 monthly investment reaches nearly $350,000 in 3 decades. Option 3 is a favorite for 2026. Fractional real estate. You used to need $50,000 for a down payment to invest in property. Now there are platforms that let you buy shares of rental properties for as little as $100. This allows you to earn monthly rental income and benefit from property value growth without ever having to be a landlord or fix a leaky faucet. Option 4 is digital assets and Bitcoin. While much more volatile than index funds, many investors allocate a small slice, perhaps 5%, of their $100 into Bitcoin. Historically, this asset class has seen massive growth cycles, but it requires a stomach for price swings. It's the high-octane fuel for a diversified portfolio. Option 5 is individual stocks. This is for those willing to do the research. Strong market-leading companies can return 15% or more. At 15%, your $100 a month could potentially grow to nearly $600,000. But remember, with higher potential comes much higher risk. Now, let's talk about the waiting tax. If you start at age 25 with $100, you can retire with $250,000 easily. But if you wait until age 35 to start, you would have to invest $300 every month just to end up with the same amount of money. By waiting 10 years, you effectively tripled the cost of your retirement. The secret sauce to all of this is compound interest. It is the snowball effect. Your interest earns interest, which then earns more interest. This is why a 20-year-old who starts today will almost always beat a 30-year-old who invests double the amount later. Don't wait for the perfect moment to have more money. Start with $100 today. Treat that $100 like a bill you have to pay to your future self. Increase that amount when you can, but most importantly, just start now.